Hi everyone, let's go over my low time frame and micro bearish Elliott Wave scenarios on Bitcoin, starting with my first low time frame bearish scenario where we are looking for a wave W and X that are already finished and now a wave Y to the downside. Wave Y can have three structures. It can be a triangle, it can be a flat, or it can be a zigzag to the downside in a double zigzag. However, if we look more locally at the structures being formed, which we will do in a second, it doesn't look like an impulse to the downside, so therefore a zigzag is kind of invalidated, and I prefer to look at a expanding flat scenario. If we think about flats, then an expanding flat is the most common, where wave B takes the origin of wave A and then an A, B, C. We do already have a three-wave structure over here, which could be the low of a wave A, but I think it would be nice for wave A to go a little bit deeper as we then enter this volume profile range, maybe bounce on the point of control 27.9k for then a three-wave move to the upside, as this pattern is a 3, 3 and then a 5-wave move to the downside. Now this wave B is then also in confluence with the triple top that we have at 30.4k, high number 1, high number 2 and high number 3. So there must be some liquidity there for all the shorts that put their stop losses up. Therefore then a liquidity grab and a move towards the downside, where wave C is then an impulsive structure, a strong move to the downside. Now if we then zoom in to this wave A over here towards the downside, we go to the 30-minute time frame, where if we look at what's been happening, this by itself is a three-wave structure to the downside and then an ABC. So this could be the end of a wave A, because a wave A is a three-wave structure. So we could say, hey, this is then a wave A, B, and then eventually a wave C to the downside. But if we are then looking for a B to the upside, you really want to see it pick up speed. It has to move to the upside. It has to go above the origin of A. And if you look at the length of this sideways structure over here, first of all, it's already quite long in time compared to this wave A. And also, it's very sideways and it's not vertical to the upside. So that is why I think the probabilities now are higher on the micro to see another move to the downside, in where this is then a wave W. So we then have a zigzag in W, eventually looking for a wave X and then eventually another wave Y to the downside. Now for a wave X, the 382 is a minimum target, and as you can see, that has been hit and respected, but the other Fibonacci's are also a target for a wave X, and we do have some additional confluences. Time naked point of control in confluence with the 0.5 at 29.475, and we also have a daily over here at the golden pocket, which is interesting. So if price would move towards the upside, these are areas I will keep my eye on. And just below price at the moment as support, we still didn't hit it, is the daily naked point of control at 28.875 for then looking a move towards the downside. That's what we're looking for over here, where we then have that point of control at 27.935. If we then zoom out again and look at the second bearish scenario, which is a little bit different. So in this scenario, the yellow wave X is not yet in. In the previous scenario on the low time frame, wave X was over here for then an expanding flat finish structure, and now we're already looking for a Y to the downside. In this particular scenario, we are still working on wave X. So wave W is still a zigzag, but now wave X is a three-wave structure, where the first structure is an expanding flat in a wave W. Then we're looking for a wave X to be finished, and then another wave Y to the upside. So this is now a three-wave structure by itself. And then after wave X is in, that is when we're going to be looking for a wave Y to the downside in either then a zigzag, flat, or a triangle. The same rules apply on the micro though, that this doesn't look too impulsive. It looks like a three-wave structure, might not yet be finished, so we could be looking for another move to the downside, and a wave X can finish below the origin of a wave W and then a WXY, where for wave X the target to keep in mind is the 1.236 and the 1.38, which is also in confluence with the double low that we have over here on my Coinbase chart for maybe a liquidity grab and then a move to the upside. Now wave X most commonly is a zigzag or a multi-zigzag. So we already have a zigzag over here, which then means, right, that wave X could already be in, just like with the other scenario, wave A could already be in. But then you want to see a wave Y moving towards the upside, so you really want to see some upside at the moment. We do have bullish CVD divergences, or at least that's in confluence with upside, but we really want to see some pushes towards the upside to reach this wave Y level. So let's see what's happening more locally. And then eventually we expect wave Y towards the downside downside. And if we then zoom in a little bit towards this structure, then it's kind of the same, right? We have a W, we have an X, and we have a Y. And if we are looking for a continuation to the upside instead of falling down and then up, we really want to see some volume coming in, and also some not necessarily bullish structures, because this definitely does not look impulsive, but you want to see price picking up. It has to move towards the upside a bit more quick than what is happening more locally. If this is the low already of this wave X, and you want to see a move to the upside. If we think about CVD divergences, we have both bullish and bearish CVD divergences. So first of all, we have bullish CVD divergences over here, higher low in price, lower low on the CVD. However, the main problem for me is, which doesn't necessarily invalidate it, but it lowers the probabilities, is that this low over here came down on much higher volume than the low that was made over here. And therefore, I'm not a big fan of this bullish CVD divergence, but nonetheless, it is a bullish CVD divergence where the target is this high over here. So it is legit. It's just one to keep an eye on because of the volume. Then we have bullish CVD divergences over here that already played out as price took this high over here very nicely before then a retracement to the downside. And now more locally, again, bullish CVD divergences. Yes, they are building higher low in price, lower low on the CVD, where the target is this high. More locally, however, we also have some bearish CVD divergences. As you can see, price being absorbed, at least the longs are being absorbed for a bit of a push to the downside. And if we zoom in a little bit to what's been happening, then you can see the bullish CVD divergence, higher low in price, but look at the yellow line, lower low on the CVD, very big bullish CVD divergences indeed. So maybe that is the push we need towards the upside, but we'll wait and see, so we don't know what price is doing, of course. Then over here we had a higher low in price, lower low on yellow as well as on blue, so a double bullish CVD on my lines. And then if we look more locally, higher low in price on blue, lower low on the CVD, but we can also see the more bearish CVD divergences, lower high on price, higher high on yellow, and here lower high on price but higher high on yellow. It is invalidated, this bearish CVD divergence, if we can go above this high over here at 29,350. So we're talking about this high over here. So if we can get a bit of a push to the upside, that would help this particular case. And more locally, because we have this push, we had some on the 5-minute bullish CVD divergences. Again, higher low on price, but on blue, lower low on the CVD, which is a bullish CVD divergence, which already played out as price took this high. Also has to be said, which I think I forgot, is that this CVD divergence is a second CVD. The first one was between these lows over here. So this pivot now has a second divergence, which is this one. And the more divergences you have with a particular pivot, the lower the probabilities are for that one playing out, but it is good to know that we at least have those bullish CVD divergences. If we then zoom out, then I want to show you this volume profile, because it starts to be increasingly important to actually have a look at this range, as price is already ranging on top of the value area high of this volume profile over here. Now, price in a bullish scenario, a very bullish scenario, you want to see it move impulsively to the upside from the lows. But the problem is that it is very difficult to find a low of a corrective structure over here. If this was the low of a corrective structure, it would have been fine. It's quite easy to find this in Elliott Wave scenarios, to have this as the low of all the scenarios. But the fact that price over here took the low again gives more probabilities to bearish scenarios, and that's why in this video I have the bearish scenario. So if we look at this volume profile for if price or potentially price moves to the downside, we then have the point of control over here at 27.9k, which can act as support, and we have the value area low at 26.2k. Now if price enters this volume profile, then have a retest and move to the downside, that would be very nice for a range trader. Typical range trading, trade the range until it breaks. So if you enter the range again, then one could look for the other side. Take profit one is always going to be that point of control. No financial advice, of course. So if we look at the probabilities, then both on the low time frame and the micro, obviously, we're looking for more downside. Also on the medium time frame, we are looking for more downside. So more locally over here, it looks like a three-wave structure. Of course, the micro can be bullish, but then we want to see some more pushes towards the upside, and it has to break the resistance that we have with the time naked point of control and the daily. So it's not necessarily that very locally it is bearish, but eventually we are looking for a move to the downside after potentially taking that triple top over here, or we are going to be looking for something like this, and then eventually more downside. It's simply the highest probability that we have at the moment. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.